All right, folks, in this video, I'm going to talk about volume, and I want to explain to you why volume is the most important thing to look at after price action. You see, volume is happening. It's happening right now. It's giving you market breadth. It's a different way of analyzing stocks. In other words, when you're looking at price action, you're looking at a stock's representation of the volume. But the volume is the actual trigger that's causing the price to move. The problem with it is very few traders know or understand how to analyze volume correctly, or the relevance or the importance of volume. They just say volume equals big move in price stock, or volume equals a powerful move in the price of the stock. But there's much more to volume. For example, volume can tell you if large institutions are buying. All right. If you know what a meaningful volume spike is. Now, I've tested several volume spikes, and you need to have a 200 or 300% volume spike over the average volume over a specific period of time. But there's other criteria you need to take into account. That's just one. Volume can help you really understand what stocks Wall Street is buying, or what stocks Wall Street is completely avoiding. So it can pinpoint you to when Wall Street is buying, and it can also pinpoint you to the amount that they're buying or what type of funds they're being exposed to. So volume has many, many, many different factors. But the problem is very few traders understand volume. As a matter of fact, let me share a little story with you. When I was measuring volume spikes, okay, I originally wanted to learn or discover a method to trade volume spikes the right way. So you would see a volume spike and you would see price move, and I would try to catch that. And only by getting stopped out several times, dozens of times, did I realize that I was looking at the whole thing completely wrong. So there's a right way and there's a wrong way to analyze volume. And guess what? About 95% of every retail trader I've ever met does not look at volume the right way. Once you turn that and change the way you turn the page and change how you look at volume, everything completely changes. You're able to anticipate, you're able to use that volume spike not to react to it, but to use it to time the next event as a conditioned precedent to a major move occurring. So there's the right way to use volume spikes, and there's the wrong way to use volume. And once you understand what a volume spike really means, what happens after the spike, how long does it take for smart money to start accumulating after the volume spike occurs, it'll completely transform your trading, how you look at the market, your market timing, and your success rate. So volume is a really important tool, and it was the hardest one for me to master. But once you can master volume, it changes the entire playing field of how you trade. It really does. Folks, like I said, you want to own stocks that Wall Street is buying up like there's no tomorrow. It adds a powerful tailwind to your trades that can improve your win rate and reduce your risk. But here's the thing. Institutional buying is just one criteria that I need in place before I jump into a trade. There's other signs that confirm that large amounts of money are moving into a stock, and it's going to cause the stock to likely explode higher. Now, I've made it into a science finding these stocks, and I just released a brand new video that shows you exactly how to identify these stocks. This training is worth your time. This strategy has led to some of my biggest winners. Simply click the link below, get all the details now. Talk to you guys soon.